Hey everybody, welcome to VerifiedInvesting.com. My name is Gareth Soloway, Chief Market Strategist here. In today's video, we're going to deep dive into the Nvidia chart as they are set to report earnings in just a couple days. We're also going to take a look at the SMH, the Semiconductor ETF, as it could be forming a head and shoulders pattern that we all should be aware of. All right, deep diving into Nvidia here. Nvidia is up about 2% on the day, solid move on the back of Friday's move. Remember, Friday's move was kickstarted by the Jerome Powell speech from Jackson Hole, Wyoming, where he was much more dovish than investors had anticipated. So that rally continuing. Now, one interesting thing about Nvidia, which is at the highs of the day today, notice how today's daily candle is well above Friday's highs. But if you look at the SMH here, let's flip over to the SMH. If we dump into the SMH here, notice the SMH is not higher than Friday's high. Okay, now again, here's where we are currently on the daily. Here's where Friday's high was. Now, what that tells me is it tells me that essentially the semiconductors are not all doing really, really well. It's mainly money flow going into Nvidia ahead of earnings. So investors are jumping into Nvidia expecting amazing earnings, and that's very clearly shown by Nvidia's chart really surpassing monstrously the highs from Friday, while the SMH, which makes up with all the other semiconductors, is actually still below Friday's high. Very interesting little tidbit there for us on the educational basis. Now, flipping back to Nvidia here, let's take a quick look at where we currently stand as we push up. It looks like this wants to make a new move to all-time highs, and that is a small possibility, but the upside looks extremely limited based on chart analysis. So what we do is we take the low from April 2025. That was the major Liberation Day low, and we drag this trend line all the way, connecting it through as many pivot points as we can. All right, so again, connect it through as many pivot points as we can right to there. Now, what do I mean by that? Well, take a look. Look, no line until it broke, no candle pierced, right, or really broke below. So you have here, right to here, all across these levels, as we can see, and then finally it broke here. Now, when something breaks a strong uptrend like this, there's a tendency for it to break, and then buy the dippers come in and they force it back. And so the idea is that this was a brick wall of support, the ascending trend line here, until it broke. Now it becomes a brick level of resistance just above the current price. In other words, if we do rally up into it, the idea is it would get rejected, and that would begin your next move. And again, remember, what I do here, folks, is I basically go over thousands of charts every single week. I've looked at millions of charts in my career. And the idea is that if you look at these sort of setups over and over again, there's a propensity for them to have a probability, right? In other words, how often does this pattern setup, the way I've dictated, play out to this demeanor? In other words, this downside move. And the answer is about 70% of the time, this is how it plays out, which is pretty darn good odds, right? So the idea is there's a 70% chance that we get up a little bit higher here, maybe touch, maybe miss by a little bit, and then we have this next leg in Nvidia down. The idea is if it continues to rally into Wednesday's earnings, that could signal actually a sell-off on earnings, where, not to say they're going to miss. They're not going to miss. And I want to be crystal clear on this. They're not going to miss earnings. But is it going to be as good as it needs to be to propel the stock to even new all-time highs beyond this high trend line resistance point? And that's really the way things set up. So just to kind of explain this again, how it works with earnings, a stock has a current level, right? A price point as it goes into earnings. If it's rallied significantly into earnings, their expectations, the market has raised their expectations higher and higher. And so again, if something's up like 50% from the last quarter going into earnings, they better report an amazing quarter like Nvidia is going to have to do, not just beating the numbers, but blowing them out, and the guidance has to be spectacular. Otherwise, the stock can't continue to go up. It's already, the expectations have been raised. Now, take another stock. Let's say there's a stock trading at 52-week lows. Well, guess what? Investors aren't thinking they're going to do much on earnings. So their expectations are way in the basement. In other words, if that company comes out and just meets expectations, maybe that stock would actually go up because it's so low on the chart. The expectations are so low. So, when people look at, most investors look at earnings very one-dimensionally. All right. And they say, oh, well, analysts are saying they have to make $1 per earning per share. And if they come out at $1, okay, they met earnings. If they come out at $1.03, they beat earnings. And a lot of times people say, well, it should have gone up. Why didn't it go up? Well, if the stock is up 100% going into that, they had to come out at better than $1.03, like $1.10 or $1.15 to continue to get that upside. And so in this case with Nvidia, we clearly see it has gone sky high from the last quarterly report, right? I mean, look at this rally. And just the mere fact from a technical analysis basis that it broke, it now has this brick wall above its head that's going to be resistance. That's around 188, by the way, and we're near 182. So there could be another $6 of upside, but that's not much. I mean, we're talking very minimal upside here on this chart, maybe around 3 to 4% before it runs into a brick wall. And then again, history shows us that once these longer term trends break, it can go up, hit, but then you get your next leg lower, and usually you take out the recent lows. All right, let's flip over to the SMH and take a look at this chart here so that we can go over it. And the one thing I'm seeing on the SMH chart is a potential head and shoulders pattern. Head and shoulder patterns, for those of you that don't know, are bearish setups. There's your head right here. Bring it down to our shoulder, and there it is right there. All right, now listen, it's a preliminary pattern. Why is it preliminary? Because you haven't curled over yet to really form your right shoulder. So this is obviously contingent that it has to curl over. But if it curls over and breaks the neckline, this is called the neckline here, then you can actually see a significant drop. That would be a break of 283. If it breaks 283, you can actually do a measurement of where this is likely to go to a measured move target. What you do is you take the highest point of the head, drop that plumb line down, and then from wherever it breaks the neckline, you do an extended move or measured move, and that gives you your target. And what's so fascinating about this, there's a gap fill right here, and then all this sideways consolidation creates support. And look, it literally almost to the penny matches that level right there. And so listen, if this curls over, and Nvidia could be the reason, and then it breaks, then the semis are telling us there's more downside all the way down to this 261, 262 level on the SMH. Okay. Lastly, again, folks, just one other little tidbit I just want to go over here on the charts. If we zoom out on this chart, this is a very interesting trend line here. Take this, drag it through, and look at this. This is just pretty cool, right? And so we talk about why this head could have been the top here in the near term on the semis. And the reason here is you have this beautiful trend line, right? Beautiful trend line going right down to the low here from October 2023. You had a gap down here in August, but then it recaptured, hits here, hits all along here. Look at this. And then when it breaks, look at this. It goes up, tests it there, pulls back, tests it again, and rejected. And now it's come back and going back to that line and rejected. So again, one way or the other, this has a lot of resistance, probably a pivot top. We're going to keep an eye on this. Does it curl over and form the head and shoulders? And then don't forget, we just talked about the Nvidia chart where we have this bigger breakdown here. And again, this could be telling us maybe there's a little bit more upside, but then that bigger rollover. So again, overall, again, and to really frame this accordingly, what this chart is telling me, it's not what I'm telling anyone, it's not my personal beliefs or anything, it's literally the chart. The chart is telling me there could be some more upside here, but it's limited to about $188 on Nvidia. If it gets close to that going into earnings, then the bearishness starts to get bigger and bigger because it has less upside, right? So when it's far away, it has a lot to go. But now we're at a point where it's only $6 away, and maybe by earnings on Wednesday after the close, it's only like $3 away. Very minimal upside before rejection takes hold, and then you see price again favoring the downside on Nvidia here on earnings. All right. Hope you guys learned a little bit. Come check us out at Verified Investing. This is pure TA. As I always say, no BS, just charts here at verifiedinvesting.com. Have a good one, guys. Talk to you soon. Take